We'll take a few minutes to demonstrate how certain things are set up properly for your W-2 forms for the end of the year. We see very often that clients do not report certain things correctly, especially for officers, that require a lot of adjustments to be done by a CPA or yourself to get a proper W-2 form for the officers. In this example, we have two employees listed here. We have Jackie and we have John. John is the stockholder of an S corporation. So what we're going to do is we're going to talk about in this video, how do you set up properly the medical contribution that the company makes each month for medical premiums for anyone that has 2% stock or more in an S corporation. Now keep in mind, this is for an S corporation. If you're a sole proprietorship, partnership, or a regular corporation, this does not apply to you. So we have these two employees. The first thing we have to do is, if you're using QuickBooks Enhanced Payroll, your payroll items are critical as far as being able to distribute all the wages and all these different deductions and contributions to the right accounts. So in this case, we're going down here. You can see that this is designed for a collision repair industry. We have pretty much just about every possible pay type listed in here, and we typically inactivate the ones that you don't use. If you are an hourly shop, then we don't use the commissions or the flat rates. If you are a flat rate shop and you don't have any hourly employees in the production, we usually inactivate those as well. But as we move down here, you'll see that there is an item called S Corporation 2% Medical Contribution. Now, I've already preset this up. I'm just going to go through with how it's set up and what you would do. If you do not have this in your system, you should if you are an S corporation, and that your company actually pays for your medical insurance. So let's double click this and open it up. I put this name in there, S Corporation 2% Medical Contribution. You can call it that. That is usually the one that you'll see on your W-2 form. As far as S Corporation, you'll see that listed on your W-2 form. So in the next section, we have our medical insurance through Anthem. Whatever your actual provider is, you would put in here. You put your enter your ID number according to Anthem. And now what we have is we have a liability account, and when we set up the payroll, we set up the liabilities such where in this case we've got our benefit liabilities listed here, and here's all the types of liabilities. And keep in mind, liabilities are things that you take out of somebody's paycheck or the company is responsible for it. You keep track for it. In this case, this is health insurance, ER standing for employer contribution. Now, it does not have to be a different account for an officer versus the regular employees. If your company is contributing to health insurance, a portion or all of the health insurance for other employees, it could all be in the same liability account. It doesn't necessarily have to have two different accounts, one for officers in this case, because the money is just going to go in there temporarily until you have to pay it at the end of the month. So we choose that as the liability account. Now, as far as the expense account, now we have this set up, and we generally have it set up where we have our production, we have our in non-production employees benefits, our production employee benefits, and then our officers benefits. In this case, it's going to be under medical insurance for officers. We hit next, and this is the most important part. On the tax tracking type, it will come up default with nothing there. And this is where you'll have to scroll down the list almost to the bottom and choose S Corporation Paid Medical Premium. And when you choose this, it's going to start doing what it's supposed to do and keep track of it for you in your liabilities and give you the proper indication when you have to pay these things. And it's going to properly then produce on the W-2 form for the officer. Then this is the default. It is going to affect some of the withholding tax in this area. And you don't have neither as far as the calculation in this case. But here's another important thing. The premium for this officer's, John's, medical insurance per month is $865. And so we put that in as the limit. And then we divide that by 4 and that comes out to $216.25. In this case, it rounds off correctly, but it doesn't really make any difference if it rounds off. If it's going to be a penny short or anything short of it, then you would actually increase this number by 1 penny, so that it's actually, if you multiply it times 4, it would be greater than $8.65. And on the 4th month or the 4th week, it will only take out the amount that needs to make up the $865. It won't take out the full amount. Also in this case, on the 5th week of the month, it's not going to show anything because it's already reached its maximum. And this is the way you handle the 4 and 5 week months, by having the maximum amount for the month and then the amount that is actually allocated each week for the first 4 weeks. And then, of course, you need to set the limit type. This is a monthly restart each month. It would be a mistake if you put annual or one-time limits, so make sure you have the monthly. And what this will do is it will basically take and allocate $216.25 as a company contribution for medical insurance for John each week of the 4 weeks. Then on the 5th week, it's not going to be there because it's already reached its maximum. In the next month, it starts over. So when you hit finish, now we have a payroll item. So the next step is to actually open up John's record and set up his payroll information correctly. In this case, we have his officer's salary over here. And here are the additions and deductions and company contributions that we need to be aware of. Now, in this case, the SEP for the officers, he is actually putting in 3% each week, and then his the employee contribution, or the employer's contribution to this, is $10 for every week. So in this case, and this also can be a percentage. This could be a lot of it. If you're using a simple IRA, it's most likely going to be a 3%. If you're a 401k, you may have other options as well. So depending on the type of retirement program you have for your company, this would be set up differently. But in this video, we're looking at the S Corporation 2% medical. We'd already put in that it's going to be $216.25 as far as the amount that is going to be allocated each week, and then it's going to be a limit of $865. So when we do his payroll each week, this is going to be indicated on there for the first 4 weeks of every month, and then the 5th week it's going to be 0. Now at the end of the year, this will actually become part of the W-2 form, and your W-2 form wages will be reflective with this information on it. And then there'll be a box in the other section that says S Corporation Medical, and there'll be a number there, which will be your deduction at the end of the year on your personal return. So this is how it's properly set up, and very often we don't see this set up correctly. If you have any other additional questions, feel free to contact us at any time.